I think what we have seen in the past couple of days, is a big carry unwind, right? And there was a lot of flow driven. It's not really a lot to do with fundamentals, especially in Japan. It was a 15 basis points, hike from BOJ last week. And they did signal a bit of hawkishness going into 2025. Governor Ueda did touch on, 0.5% was not the ceiling of the rate hiking cycle in Japan. And that, was accompanied by very soft, U.S. employment data coming out on Friday, and people were really worried about, what is going to happen with fundamentals in the market. And there was a lot of levered positions in the market and systematic unwind, and that's what we have seen, in the past couple of days. But market seems to be, stabilizing here. The worst of, the systematic selling off are probably, behind us, and we are seeing, market trying to re-engage and reassess what they have to do going forward.
The action we've seen in the markets in the last couple of sessions certainly increased the criticism of the BOJ around not focusing so much on the data, really just being stuck on that path to normalization, and also, of course, perhaps arguably the yen forces. Maybe some of the rebound we're seeing today might start to ease some of those criticisms of the poor timing of that hike. But how do you read this situation with regards to the data? Because no doubt that was exacerbated today by that 1.4% year-on-year drop in the household spending.
I think the Japanese data, there's a lot of noises in it. In total, it is still pretty sanguine. Growth is still doing okay in Japan. The first quarter growth was, underwhelming just based on a lot of this auto production decline. It was a scandal in Japan, and that will, recover into 2025. And household consumption still pretty okay. Japanese retail sales still holding up pretty okay, and we are seeing a lot of wage growth coming back up in Japan just based on the Shinto negotiations. And also what we have seen this morning was the real wage actually was positive. It recorded positive for the first time in a year time. We are seeing the results of the Shinto wage negotiation very slowly, coming into the market, and with inflation stabilizing at current, numbers. I think the recovery in consumption story will be intact. And we have a lot of inbound tourists too. So services in Japan is holding up pretty well. And I would look at more the data, the fundamentals, rather than being driven by all this noises and a lot of these flows and sell off in the market.